All right, guys, I'm on the second. Welcome to another back testing session, and it is close to 2:30 on a Thursday, and it's July 24th, 2025. So what I'm going to do is I'm going to actually go over the trade that we went over this morning, number one. And then number two, I'm going to actually do the top-down analysis on how we mark up liquidity from bigger time frame to the smaller time frame. I'll get started here momentarily. All right, guys. So just to give you guys a little bit of a recap. So when we entered the market around 7 o'clock, this is what price was. Now, the very first thing we want to actually look at is the fact that number one, um, when this is going to come on, it's not coming on right now, so I'm not going to worry about it. What we want to know is that the first things first is that we figured out that we're in a bearish trend as well. You can clearly see that. That's number one. Okay. And we're drawing a trend line to show you guys. But then when we got the market up liquidity from the 4 hour, we went to the 15-minute. We wanted to see exactly what price was as far as where liquidity was landing. And that was either the external liquidity or internal liquidity. You can see that price is at external liquidity here. Let's turn on our indicator here. So we can clearly see the price is at external liquidity. In fact, it had left from internal liquidity pretty much here and pretty much here. Okay? So then the very first thing that I wanted to look at is that, okay, was there a liquidity wave? Okay. Now we have a liquidity line here. Okay. And price weighted that, went down and weighted this. But what I noticed is that price didn't immediately reverse. And if price was done waiting, it would have reversed and went up and hit this open. But no, they decided to sell a lot more, which lets me know that there was a lot more liquidity that they wanted to get. So then what I did was basically I said to myself, I said, okay, we're at external liquidity. So it's obvious that price is eventually going to do a big giant reversal to get all of this open here. We've gotten half of this so far. Okay, this is probably the first mitigation they've gotten, but they haven't gotten all of this open yet. So the next thing I want to look at is, okay, is there a previous low that they haven't wiped out yet? And here's the other previous low. So then what I did was I marked up this low here. And I noticed that price did wipe this out. So then I said, okay. So then what we're going to do is we're going to look for a final raid, see if price wipes out this low here. There's a liquidity raid here. Then we're going to jump in for a volume candle at some point for it to go all the way up to here. So then the very first thing that I did was I took, I marked up my pullbacks. So with the 15-minute pullback, I actually put it up to here. So this is the 15-minute pullback. Like I said, price is either probably going to get this liquidity, wipe out this low and then go down, or break above and go up. This is the 15-minute change of character, pullback point. Then I said to myself, if I'm going to buy this up, then I'm looking to buy up on a volume candle once the rate is clean. So I looked at it and I took my Fibonacci and I swinged it from the most recent low all the way to the most recent high here. And then I ended up putting my 100% here. So I said, I'm expecting price It's going to raid this line. Maybe dig down here, stick out, and then push on that. Then there's the door to here. That was my initial of what my initial thinking was, that I wanted the course to break a compilation. And then the next thing I did is I forgot to do one more thing. So then on the 3 minute, we actually saw a change of character right up here. And I'll put the 3 minute, 3 hour, 3 minute change of character. Maybe you have an idea of what Pipe's going to put it back to. Now we go back to the 15 minute. So that was the area that Pipe's can pull back to. So then this is where I expected, you know, not expected, but I suspected that Price was going to be able to clearly pull and then patch up to here. Now, what I was originally going to do was wait for Price to actually pull all the way back, wipe out this liquidity, and then took a sell further down. But we're at external liquidity. So it's really time for Price to reverse up at some point to get all of this open. So that's what I reasoned out. So originally I was going to sell it down, but then I said, now I'm going to buy that. And then what I did was I took my risk to reward to it. I placed it right here. I wanted to get all the way up to that. And I wanted to put my stop loss maybe down to here. Now we're going to actually watch the price action slowly. Let's see exactly what price did. Let's go ahead and play the replay. So just remember at this point, we did have a liquidity rate already this previous low, but we want to look at this low. This low has not been rated yet. We don't see price piercing through with the big wick and this liquidity low. We don't see that yet. So I would like to see that because I would hate to actually get into a trade and then have price pull back for me and get into a lot of drawdown or hit my stop loss. Now, if I have to get into a lot of drawdown because I did suspect price reversing, but then it put me back up, that's fine. And you want to try to avoid drawdown as much as possible. So let's play the replay today. So you can see price sticking out of his breaker structure. That's in this liquidity area. And then here was the first liquidity sweep here. This may have been actually the first one because it sticked out of here. This is the second one. And then I believe we have another one and maybe the blue candle. I said maybe on the red candle before. They came out. Okay, yeah. So price did another liquidity range here. And we're getting a whole bunch of stop losses here. And you see if I can actually stats behavior here, so you can always put 8 years so you always remember that this is what they were getting. There's still a lot of stop losses that has that was resting here. Okay. So then after this, I believe this might have been 9:15, 9 o'clock, 9:15. Okay, so I take that back. So this was the first stop point, this is the second one, this is the third one. But like I said, that's the reason why I did a huge big pullback here. Now, of course I would have probably would have been to the trade. So even my stop loss was here, they would have got stopped out. Now let's keep playing the replay to it. Now this was when the raid was completed. But you see this wick is bigger than this one. So they came all the way down here to get a lot of stop losses. After that, they were done. So this. So This is the final straw. Now, this was probably maybe 9 o'clock. Okay. Then we wait for the rain, and let me put my wheels here. So again, we confirmed the liquidity rate. Price slipped below a known liquidity level, whether it's a London low, Asian low, equal low, whatever the case may be. And it showed a soft rejection and failed to close below the level. This failed to close below the level, and again, there's two sharp wicks. You notice even previously here, we had a rejection here at the liquidity level. The price didn't instantly push up. So anytime when we see liquidity stunts, the price doesn't follow through and reverse up, that means there's still more liquidity resting there, and they're going to get that before going the other direction. So we have to be very, very sure that they're done. They were done here. And I'm going to play the replay tool to show you guys why. This is a doji. I believe this was the 930 candle, okay? Now, real in reality, this candle right here was a sign of strength. Well, let's put it this way. It had a lot of meat at it, no big. But we still weren't sure to get into the trade. And that's the reason why patience is the key. You want to be sure. And so, usually, we identify reversal candle like if it's a doji, small body candle, or a bullish engulfing candle immediately after the raid. This did form immediately after the raid. So then what we do is we basically we basically wait for this candle to close above liquidity level, which it did. And so then when it did, it formed a doji. Now doji means indecision in the market. So that's the reason why we didn't jump into this. But then when 930 hit, well, I think this was actually 945. This may have been 915 and 945. Price pushed up. And so I believe we jumped anywhere in between here. Okay. Now, let's go ahead and play and see how the replay tool here. And then there's another tweak I want to do as well. And so we pretty much hit all the way up until this liquidity level. I think we even went further than that. Okay. So we ended up profiting $112 on that. Now, one of the things that I forgot to do was to make an adjustment. So this was the 100% change the character pullback, but I ended up changing it actually down to here. And I changed it down to here because when the price finally made this dip, then I concluded that this was probably close, that this was supposed to be at the end of the liquidity rate. So then that's when I took my Fibonacci retracement and went all the way down from this low to this high. Okay. And then I think I might have it right the first one. Oh, okay. This is what I had. Okay, bear with me. Let me erase this. So I had it started from this wick here all the way up until this high here. This is why I have my 100% on it. And here's really why I'm putting this up. Because it seems like that when it comes to the 100% line off of the Fibonacci, price either raise that liquidity and goes to continue that direction after it's being rated, I mean, as far as the reversing, or it's going to change character and change directions. And I'll kind of get into that when I go to my top-down analysis. But notice price without this 100% change of character area, and then it continued to go up. So let's just know that this level helped. And so this is a good level for what I can see. Because what I notice is that when we draw Fibonacci levels, the 100% is typically where price either changes complete directions, or it may raid a previous high or low at that 100%, which is a change of character, and do a liquidity raid and then continue that. So, like, perfect example. So that's how we own this trade. So now let me kind of look at this for a minute here. So when we do a backtest replay tool here, and I'll just put right here. So you see that we're bearish and price is piercing through liquidity. Okay, it was piercing through. Now, I could take my Fibonacci and draw it down. Okay, now notice here, price rejected is 70%. Now, eventually, this is all open, they automatically in this area. So it makes sense that eventually they're going to come back up, right there, this area, and then come back down. They may do it right away, or they may do it later. Okay? So you notice that price is going to raise this liquidity and go down. Now, if you fast forward all the way to current price, right? Now, you notice here, price rejected at 50%, but now it's still looks like it's resting on the 100% here. It may hold and finally hit all this open and raise this liquidity. But now let me do a top-down analysis and show you guys how I mark this up, and I'll show you how this comes into play as well, the 100%. When you pause this recording. Okay, I'm back. So we're going to switch over to gold futures. This is our backtest template because I don't want to mess with actual trading template. So what I'm going to do is activate the new trade and we'll get started. All right, so now the very first thing that we do on the 4-hour is we mark up liquidity on current price. So you see that there's a liquidity here. Why? Because this wick knocked out this previous wick here. That's a raid. So there's liquidity at that point there. So we're going to take a horizontal raid and we're going to draw liquidity here. And they're like right here. Because notice, whenever price raises a previous low, it's going to dig a lot deeper than that previous wick. We're going to make this the 4-hour. Sets out liquidity, and that's going to be external because this is external. This is on the outside liquidity account. Now we're going to look for the external on the buy side, and you can actually kind of see that up here on this fair value gap here. Okay, looking at this fair value gap only if you don't want to spread price out too big. This is external here. Let me pause this recording. Guys, sorry about that. I had a phone call. Okay, so we marked up liquidity on the external side. Now let's look for liquidity on the internal side. Now, of course, we see that price kind of traded into here. We see that there was a range here, so there was liquidity here. So we could just probably just go up there, mark up this area here, and make this the internal liquidity on the downside. And that's probably all we will do. Okay, so now let's go to the 15-minute. Okay. So now, the very next thing I want to find out on 15-minute is is price near external liquidity or is it close to external liquidity? Okay. Now, one thing I forgot to do was, I'll go ahead and mark up liquidity right around this area too. There's liquidity here. I'll say that the buy side is really up here. There's a more the sell side. So let me mark this up. Yeah, 617. And now we go back to the 15-minute. So we can see where price interacting with liquidity now. It's really approaching the external side. So now we need to know how to properly trade this in the sorry, not external, the internal side. So the very next thing I want to do is I want to ask ourselves, okay, what trend are we in? So first of all, is price consolidating? Which we saw some consolidation here, but price broke out, or is it trending? So in this case, price has started to trend. Current price is trending up. We know that just for the simple fact because price happened to break out here. Now there was a liquidity right here. You see how price is rated this here. And then it held this level and pushed up. So now we know that price is trending up. So now let's turn on the indicator. And now what we want to find out is, number one, has price passed the change of character? So we see that. Okay, so this is going to be a 15-minute pullback. Okay. Now, the next thing we want to figure out is, okay, what did Asia not finish? Well, it looks like Asia created this huge fair value gaps, a lot of fair value gaps here. And it looks like prices probably came back and might be ready to mitigate half of this. They came back and mitigated a little bit of this here, traded into here, and then went down. So they traded all the way up until this point. All of this is still open, okay? So then in this case, since we're bullish and we have a change of character, then I would be looking for price to come back down and trade into this area. We're kind of trading to this area, but I'm looking for it to maybe wipe out this area and then go up. So I would take my Fibonacci. Both in this most recent low, this most recent high here. Okay. And I would be looking for price to either pull back to the 50%, pull back here, wipe out this low here, or come back to this 100%, stick out of here and then push up. Then I might be actually enough juice to maybe get halfway to here. This is a 100% change of character of the KV rate. Okay. And so then I will put my entry here. You're looking to get maybe this open up here. Now, price breaks past this change of character here. But we might be going bearish. Maybe. So, go ahead and play the replay tool and see what price ends up doing. Never put this here on the wild and still. So we have price go up quite a bit, but we noticed that price did wipe out this previous low here, so it might so reverse down to this point, and we have liquidity right here. Now, at this point, I would still be looking for price to stick out But let me actually change my Fibonacci level. And I'll be looking to swing it from this low all the way up to this high. And be looking for price to really pierce this 15-minute pullback or change of character, and then push all the way back up. And then hit our target. And notice it didn't come anywhere back to here. And our price rated this previous width here. Now we can change this. This low all the way up to here. And you can see that price stuck out of here just a little bit. It does get a quick twist here, but we have a sign of strength here. And the price sees our target up here. So we had a lot of good buying opportunities, so we were correct. Label this. Now keep in mind, now we have a liquidity rate here. It's piercing out of this change of character. Okay. But we'll see if it holds above and goes back up to here, or it's going to close down. If it does, then we know that it's going to target down here. All right, so then we had a complete change of character. So in this situation, when this happens, a price closes down, then we know that we're targeting the other way. And we take this high here, all the way down to this low. And you notice that price expecting 50%, then back to the 30 and went down even more. So we had a change of character and it went down to here. Now, in this situation here, this is where I'm going to look for a liquidity pool. We have a liquidity pool here. So I'm looking for this low to be rated. That the notice is trading into this area. It might be ready to go down, possibly, or eventually. All right, so we decide to go back up. So they're eventually going to get this. But now let's study this. So now we see that there was a lot of consolidation. We didn't trade this, but we had liquidity rate up to here. Okay. But then, since we're in consolidation, we don't know which one is going to break out. So then we want to wait for price to do a change of character and let us know which direction that it wants to break out of that consolidation. So now notice price stuck out of this break of structure and it rated this liquidity here with this width. So we have one and we have two. Now, if we swing our Fibonacci from this low to this high, we will see that price pierce the 100% area. Mark that up ahead of time, but that's a price deal. So now at this point, I will wait for the price to break above the change of character and get all this open. That would really be the safe way. Stop loss here and get all the way up to here. Notice price held this level, change of character level. Here's out of here, bounced it out of here, and went straight out. This was a really good move. Trading into this fair value gap. And then we hit our target. And we have this liquidity up here. Right. So this is just a perfect example. Now, when you look at this example here, we can see that this load's been rated with liquidity. So let's mark this up. So I guess I put the edge in mark there. And this right here. Now, if we mark our Fibonacci from the most recent high here from this last liquidity rate all the way down to this low here, maybe even down to this low, we can see that price has rated this liquidity this line here. Okay. So it makes sense for price to maybe trade down halfway here, maybe wipe out this wick, or maybe come down to here and come all the way up. So in this case, you see a change of character here. Price is still bullish. So now we're going to mark this up. And you look at the 5 minute. It's like 5 minute is bullish as well. 30 minutes is very bullish, but that's still something. There's a 1 hour. That lets us know that we're probably in very, very good hands and very bullish with this. So then, basically what I would do is take my bid and from the most recent low go to the most recent high. And then I would be looking the price to go back and then this area. They're going up. Or it's going to come back and trade into this area, which it already did. But I'm just saying theoretically, this is what I'm thinking. And I'm not giving enough Fibonacci. Okay. So now, we'll erase this. So then at this point, I'm putting my entry up to here. My stop loss a little bit below the change of character line here. And then targeting this open. See what I end up there. Okay, so push up even further. And then we walk out of target. Yeah. The price needing to come back to this point, but I do this as a safety measure, just to sometimes expect the fact that sometimes the price will do a temporary pullback to either half of the half of the fair value gap, or sometimes they may target the previous low to get more liquidity to build more juice to push back that same direction. So we have to always keep that in mind. That's how liquidity runs. You know, you can see that here, price step out of here, did that, price step out of here, wipe this out, you know, so on and so forth, and then just continue to go up. So now let me do one more example and then we'll wrap it up. Let's mark up some liquidity. So we see that there's liquidity in this area here. So this is going to be the external point. I think I have an idea what price is probably going to do, but we'll do that to get to the 15 minute. So this is external liquidity. We can actually say this is probably the buy side here. Right here. Buy side external. And then we'll say that this is the internal right up here. The internal on the buy side. And then this is the sell side. No, sorry, internal on the sell side. So now that we have this marked up, we're going to move on to the 15-minute. So now you notice here, you see that price has rated this liquidity here. It hasn't rated this low. Now, this is external liquidity, price is close to that, okay? So price is still technically internal, but it looks like it might be headed for external. So then what I would want to find out is turn on the indicator. So we see that we're bearish now, currently bear. And we have some strength here. Now we have some liquidity up here as well. And we're going to say right here. This price could, come up and maybe wipe out this occasion come up here. Well, it could trade happening to here, but that's not a good point. So you see that price broke the change of character, so we know where the bear is in control. So at this point, since we're close to external liquidity, then what I would want to do is I will basically want to mark up. I will basically use my Fibonacci drop for the most recent low that I set here, the most recent high. But the reason why I'm doing it is because it match my liquidity line here. I'm gonna make this to 100%. Because now I want to see price actually really rating this area. It's rating down here, and it looks like it's going to go down further here. Actually, I'll take my Fibonacci and swing it from this low to this high. And now I'm looking for price to really do some external liquidity back. So let me just change this to so greater liquidity. Because that's what I'm expecting. Not expecting, but that's what I think is going to happen. So we had a rate from this previous low, but this has not been rated yet. And what we want to do is look for that rating. Now, what I want to do is go to the 5-minute, 3-minute. We're running to that probably about 5 minutes. Right, it's not. So now, I want to wait for price to pierce and then this low. So it looks like it came up and traded into this area, which is expected because they have a metadata half of this. So we had this first raid here and it pierced here, but it's still equal lows here. So I want to see price really pierce out here and then come up. So maybe price is probably so now the price is pushing up. I want to see how it reacts to this and see if it comes down here. It's still going to go. All right, so based on this, this was the final raid. Price rated this and rated all of this. So it's an equal low with this low here. So the banks were probably satisfied with this rate. And then when you look here, but then when you look here, then I will probably have put my entry somewhere here, stop loss down here. And then I would just target this liquidity up here. Now, when you play this, you see we had a sign of strength, very clean, so this is good, right? But I probably would have waited for this change of character to blow it out to close the guard. If price still pulled back, but it did hold this level, gave us a good strength candle here. This probably would have been an entry, but this was probably the better entry here. Technically, it plays above the change of character line, not yet. Yeah, so this might have been our entry here. But again, doesn't play above the change of character, but it's still holding to this level, which is holding to our next range of percentage change of characters. And they rated this area, so this was correctly drawn. But now, we want that out of the preview. Take some kick back. There's a very good opportunities here. But this was good. Then we'll do one more example by continuing from here. Now, we have to change the character here. And let me do this. We have to change the character here. And the Bulls are in control and we waited this liquidity. So then, if anything, if I'm going to buy this up, I'll take my Fibonacci, swing it from this most recent low to this high. If anything, looking for price to lay this liquidity here. And that's the worst case scenario. Best case scenario, price trades into this fair value gap and continue to go up. And then I'll go ahead and take this here. And that's what I'll be looking for. Then I would take this, my entry here, stop loss down here, and I got another pretty unit. This has been touched and rated, so they're probably not looking at this. Let's see if price pulls back to this point. Which it did, trade it back down to the 50%, and then it pushed up. It looks like we almost hit our target right there. Bring it back into this area. Made a liquidity pretty good. Now it looks like it's going to stick out up here. But notice it did push through here. Let's see if it pushes a little bit more before it goes up. Let's see if it does that. Now it has to hold here in order for it to still be bearish. Now if we pull this and close it down here, we know where they're going. So this has been rated, so they may be ready to push this back up. Possibly. Or because this was rated, they might be ready to take it back down here. Let's see if the next candle closes above. No. So the bears are officially in control. And now, again, in this situation, we take a sell. Last will be here. We already hit this target. Let's see if we come all the way down to here. We still have a little block here. So we did hit our target. If we go all the way back to here, if we did have a order block here, so we could have targeted that. The price did hit that. Of course. Now, you notice that price went way below the 100% liquidity line, which I expected it to. So that's the reason why I kind of be making my stop loss. Kind of put it all the way down here, but sometimes I put it all the way down here because I knew that price would get this area and then try to wipe out this low. Now, entry could be anywhere right here. If we haven't changed the character here. price pushed up. Put it back. It hasn't pulled above the change of character yet, so you really got him. But it's holding to this area. You notice that this wick wiped out this one, so the range was complete, but then they came back and tested it. You notice that it's holding this area. Now, what about in yet? Sign of strength. We test up. This would have been our entry right here. Now let's see if we can put this target up here. Nothing but scan. What else target? And close enough. Yeah. Really right there. Boom, and then we got that. And then you can obviously look at this area here, and we'll probably stretch my change of character maybe down here. Price per traded to here. And there's some say taking a look to change of character here. Expecting 50% that we'll see if it does. Here, like down here. This activity and see if we can do it. Don't really have to benefit anyone. But yeah, so it looks like we respected the 50%. Technically, this week did wipe out the red bridge here. So they're probably done getting this area. They're probably ready to go up here. Let's just find out. Yeah, we hit our target. So yeah. Yeah, that's how we trade this, guys. And so that's it for the back testing session. And I'll see you guys later. Bye.